Hey everybody, and welcome to another live earnings preview here with Zacks.com. I'm Dave Bartosiak, and today we're going to be talking about Fitbit. You know those fancy little bands that people have on their hands? It's measuring how many steps they take and what their heart rate is and all that kind of fun stuff. That's what we're going to be talking about today. Now, this is going to be just one of 3 of these that we're going to do this week. Tomorrow, we're going to talk about Tesla. And then on Thursday, we're going to talk about Priceline. So a couple of exciting tech companies this week. And then I guess you could call Tesla kind of tech now that it bought out Solar City, but that's a discussion for tomorrow. But first, today's main event, Fitbit. So we're going to dig into the price and consensus chart. We're going to take a look at the detailed estimates, what expectations are on the street for their earnings report after the market closes today. And we're going to give you a live options trade or two. So one, if you're bullish on the stock, I'm going to go ahead and give you an idea. 2, if you're bearish on the stock, I'll give you an idea there. And then I'll tell you what my pick to click is after that. Now, if you looked at last week, we had Google come through. We ran a strangle on Google, and it actually paid off great for us. We needed Google to close below 800 on Friday and above, I think it was 720, and it managed to close at like 793. It was a little bit close there, though, on shares of Google as they really popped in the after hours after their earnings report on Thursday night, but it ended up all working out. So I'm hoping that today I can get you another trade like that. So let's go ahead on Zacks.com and take a look at the price, consensus, and EPS surprise chart for Fitbit. Now, Fitbit was a recent IPO, so we don't have that much data here. We start off in mid-2015, really, after the IPO. You see that this black line here represents the actual share price. That coincides with the right y-axis. You can see shares of Fitbit got well into close to 48. I think intraday got up to 51.90 on Fitbit. So that's a pretty good move there. You can also see these different colored lines here. These represent the earnings estimates over time for our Zacks consensus estimate. And you can see they had high hopes kind of right at the IPO. Those came dipping down, rallied up, or at least the earnings estimates rose consistently into the end of 2015. But since then, they've been trickling down here a little bit. And even though the stock has beat 2, 3, 4 quarters in a row here, you see the reaction to these beats has been negative every time, and I really think that's a function of the guidance. The guidance hasn't been so great coming off of Fitbit, and that's kind of the scenario that we're looking at today, where you have these numbers where you've got high hopes for 2017. You're going to have some growth there. 2016, the numbers basically have been flat for the last year or so. Not a lot of movement in the positive direction. And the consensus right now is for a 14% decline in quarter-over-quarter revenues. Now, it's a little different with shares of Fitbit here, though, because this is obviously something that is going to benefit from gift-giving times, like the holidays, right? Everybody's going to want to get a Fitbit so they can put it on their wrist or buy it for their dad or whatever, boyfriends, girlfriends, whoever wants a Fitbit. I don't have one, but that's kind of obvious. Brian Bolin has one, though. So anyway, I guess the thing is here, it's one of those kind of one-offs, right? Where you think of like the GoPros of the world, like, okay, it's sort of a one-trick pony, and they're trying to branch out into other things, right? I mean, Fitbit is not just about this one Fitbit that you put on your wrist, but it's the actual, all of the data that goes into that, and how can they help you interpret the data, and what can that be used for kind of across a much more broad scale. Now, a couple of other things with Fitbit stock is maybe they are a buyout target. If you look, Under Armour actually made a couple of acquisitions of companies within this sort of space. And then you have, obviously, Nike, the big player on the block with some of the things that they've done. So could Facebook end up becoming a buyout target for one of these much larger athletic brands? That's something to consider in the future here. So back to Fitbit. Let's look at the detailed estimates page here on Fitbit so we can kind of see some of our Zacks ranks, some of the numbers here. So it is right now a Zacks rank number 4 sell. Value score of A, growth score of A, momentum of C. So this is kind of surprising that the VGM sort of style scores are favorable for it right now. That's something to keep in mind. Year-over-year growth, though, we're still talking 45% almost. But look at how the number drops. Next quarter is only going to be about 25%. Next year's number is down to 18%. You know, how many Fitbits do you need, right? Let's look at the actual Zacks consensus estimates here. And if you notice that 90 days ago, analysts were looking for 19 cents a share out of the stock for the current quarter. Now we're talking 4. If you look at next quarter's numbers rather than a quarter just 90 days ago, we're talking about 9 cents. Current year numbers have actually increased a little bit from 89 to 90. That's called tail end optimism there, right? That's kind of pushing it out, thinking things are going to get better in the further out quarters. Next year's numbers, though, have gone from 113 to 108. So then as you start to wonder, I mean, how much money do I really want to pay for a stock like Fitbit? What sort of valuations can I justify given what's happening here, you know? But granted, we're only trading at 15 times earnings right now, so go figure. All right, let's go ahead and take a look at the actual options chain here on Fitbit, see if we can't come up with an idea or two. So as always, I like to look at the front week options chain. So this thing's going to expire on August 5th, which is Friday. Go ahead and bust out that straddle view on Yahoo Finance. That gives you the calls on the left side, the puts on the right. Just check it in. We're about 13.22 on shares of Fitbit. So let's take a look at the at-the-money calls and the at-the-money puts, and this is going to give us an idea of what the market is pricing in for a move for shares of Fitbit. So 102 on the call side and 71 cents on the puts. It's a $1.73 divided by that 13. That's a pretty sizable move. The market's pricing in a 13% move here on shares of Fitbit. That's pretty impressive. Now let's go ahead and dig into the actual sort of numbers surrounding this options chain. I like to take a look at where the volume has been today and where there's been pockets of open interest, right? So the 1250s have 2,900 contracts, the 13s have 7,000, 1350s have 1,300. There's a lot of interest here all the way up to the 1550s. Have 1,000 contracts out there. And then this is still pretty healthy, 400 all the way out here. If you look at today's action, 1,300 on the 1550s, 879 on the 15s. That 3,800 at the money is pretty good. Now, if you're looking at the put side, if you notice there hasn't been as much activity, the open interest numbers are a lot smaller here on the put side than they are on the call side. Part of that is probably you're talking lottery ticket type stuff, right? Because people are coming out here, they're willing to roll the dice on one of these calls, hoping that, you know, Fitbit might pop, whereas they think maybe it's overcooked, it's overdone a little bit to the downside. That's why you're not seeing a ton of volume or open interest on the put side. But anyway, 1250s do have 1,396 contracts. The $12 have 1,372. But again, remember, we are pricing in a move of about $1.70 on the stock, and with the stock at 13.22, right? Then we're talking a pretty sizable move. So to the upside, that's almost $15. We'll just call it 15, right? Go ahead and mark that down. $15 on the upside, and then if you subtract that $1.70 or so from the 13.22, that gets us over on the in the 1150s here. There's only 392 contracts at 1150 on the call side, on the put side. So let's look at some of these premium numbers that we have here. So keep in mind this $15 level, we could still get 29 cents on the $15. 22 out here. Okay. All right, so this is what I'm going to do. So on the bullish side, I think what I want to do is I want to move out this a little further out so we can catch some of that post-earnings drift if the stock does well. So let's go out. Let's open up the chain for September 16th, 2016. So that's the September month expiration for shares of Fitbit. Gonna wait for this to load up real quick. Sometimes Yahoo is more, sometimes it'll load quicker than others. All right. So the $13 call is $1.50 here on shares of Fitbit. So if I want to mitigate some of that, I think what I'd just do is I'd go ahead and I would go long the $13 and I would sell this 15. So I'd do the 13.15 call spread. So take that $1.53 that I'm long at 13 and subtract the 68 cents that I'm short at $15. That's 85 cents, right? My upside is the $2 minus the 85 cents, so that's $1.15 of upside, right? So 115 of upside minus the 115 of upside compared to the 85-cent investment. That's potential for 135% return as long as shares of Fitbit close above $15 at expiration on September 16th. So that, I think, would be a good bullish call spread there to work on shares of Fitbit. Now, on the flip side, if I'm going to be bearish on Fitbit, I think I'm going to go ahead and do the same sort of trade just on it. I'm going to do a put spread in this case. So I'd be looking at buying the $13 put, right? So that's going to cost me $120. Actually, you know what? Even better. I would buy the $14 put. 14 is going to cost me $170. And let's just go down to, let's go down to $11 here on the downside, because remember that's sort of what we were pricing in on the at the money options in the front week. So that 170 minus the 39 cents, that's 131, okay? But what I'm going to be able to make here is the difference between that 131 and 3, because my put spread is, the difference in the strike price is $3 from 14 to 11, right? So now you're talking $1.69 of potential here on shares of Fitbit, right? When I paid that 121. Not the 121. Boom. So you're talking 129% potential there. All right. Now, this is the thing, though. Think about how convinced you have to be that Fitbit is going to move in one direction or the other. So either there's going to be a short squeeze and these bears are going to be heading for the hills, or somebody new comes in and really pounds this thing down, okay? I don't believe that that's going to happen this quickly, right? I just can't. 13% move in shares of Fitbit when there's already so much on the table. We already pretty much know what to expect. It's not like there was any huge secret and a bunch of people are buying Fitbits all of a sudden. Maybe you buy them for the Olympics. I don't know what the heck's going on. If you're in the Olympics, you probably already have a Fitbit. And if you're a fan, you're not walking around Rio counting your steps because somebody will probably stab you and take your Fitbit. So I guess what I wanted to say here is, though, my preferred trade, I think I'm going to do another strangle like I was talking about with shares of Google last week. So, again, let's make this one quick. So let's go to the front week, expiration. And remember those levels we were talking about earlier, that sort of $11.50 to $15 range, right? Because this thing's only going to have 3 days to move. So I'm pretty confident in selling some of this. So if I go ahead and I sold the $15 call, right? If I sell the 15, I'm going to go ahead and take in 29 cents. 29 cents doing that, right? Now, I don't want to have unlimited risk on this trade, right? So I think what I want to do is I want to cover myself by buying a further out of the money call. And I'll go ahead and I'll buy the $16 call. So So that's going to cost me 13 cents, right? So I'm going to pocket 16 cents, and then on that leg of the trade, I'm going to have 84 cents at risk, okay? Right? You following me? Okay. Now, on the flip side, what I want to do is I need to make sure I'm short on the other end of this thing too. So if we go ahead and we look down at the 1150, I can sell that for 21 cents. So I'll go ahead and take in the 21, and then I'm going to buy the 1050 for 8 cents. So there's 13 cents a gain with 87 cents at risk. Okay, now here's how this ends up playing out, everybody. There's 3 different scenarios that could happen, right? A, Fitbit could close above $16 at expiration this Friday. If that's the case, then I would end up losing that 84 cents that I had at risk on that side of the trade, okay? So that's minus 84. But this is the good news. So even though I lose that 84 cents on one side, on that short call spread, I'm definitely going to make all the money on the short put spread. So I'm going to make that 13 cents, right? So I got the 84 minus the 13, right? So that's a 71 cent loss that I would take on that end, right? If shares of Fitbit closed above $16 rather, at expiration. Now, if they close below 10.50, then I'm going to lose money on the other side, right? So I'm going to make the I'm going to lose the 87 cents on that put spread, right? Lose the 87 cents, but I'm still going to make the 16 cents from that short call spread. So again, 71 cent loss. That's kind of my max loss that I could end up losing in this thing. And then the rosy scenario is, what if shares of Fitbit close between 11.50 and 15 at expiration? Now, granted, we're talking about 3 days on Fitbit. So as long as Fitbit doesn't move 13% in one direction or the other within 3 days after earnings, I'm going to pocket all of this money. I'm going to pocket both sides. So I'm going to get the 16 plus the 13. I'm going to get 29 cents is my upward. That's the most money that I can make here, is 29 cents, right? So the most money that I have at risk is going to be that 71 cents. And the most money I can make is at 29 cents. So I could essentially make 40% on this trade, right? So that's pretty decent. Now, the other thing is, there is a scenario where if you're in between that $15 and $16, or if you're in between that $11.50 and $10.50, that kind of nickel for nickel above that $15 level, you're going to keep losing a buck. And then, I mean, penny for penny, nickel for nickel, whatever. And then every cent below that $11.50, it's going to be the same way. You're going to end up losing $1, right? So you got to take your 16, your 13, your 29 cents that you got in your pocket and add that to $15. So 15.29 is your break even on the upside. And then go ahead and do the same and subtract that from 11.50. So 11.21 is going to be your break even on the downside. So as long as it steers between 11.21 and 15.29, I will end up making money on this trade. So that's my particular trade I think I'm going to put on this one. I gave you the bull trade. That was the 15-16 call spread for September. I gave you the bear spread, the bear trade, and that, I mean, I'm sorry, the bull trade was the 13-15 call spread. The bearish trade was the 14-11 put spread for September 16th. And my preferred trade is the strangle. All right, so make sure you chime in the comment section below. Let me know which earnings report you guys are looking forward to for next week. If you're looking for some trade ideas, let me know what trades you put on, if any, this time. Let me know if you have a Fitbit. Let's talk about the earnings a little bit and see what ends up happening. If they do end up hitting this, paltry 5 cents per share they're supposed to hit, or if something really gets gnarly and it just looks terrible. So be sure to come back tomorrow because we're going to be talking Tesla. I think that one might be a little bit more exciting than the Fitbit, but I am partial to Elon Musk. So again, thank you so much for checking us out today, and we'll see you guys mañana.